Welcome to Coffee and Crypto with Lee and Jimmy. I am Lee Reiners, joined as always by Jimmy Lenz. Jimmy, good morning, sir.
Good winter morning. I'll tell you what, man,
Storms are coming.
we're
Storms are
preparing for
coming.
Minnesota like weather here.
We don't, yeah, maybe not that far.
Maybe
I
not that
mean,
far.
like half the country though is,
Yeah,
you know.
I'm surprised from all the way Texas all the way up. These sub freezing temperatures for days at a pop, and we don't do that here. We
No,
can't go out and play golf. I mean, I don't know. World's just going to hell
just,
in a handbasket,
just,
Lee.
well, yeah, you can say that again. Well, I hope all of our listeners are staying safe, staying inside, staying warm. I think half the country is just going to be hunkered down for the weekend here, Jimmy.
Probably.
Um,
But
but
there's a lot of good reading. I got a card from somebody the other day. I'm still friends with people who write actual physical cards and send you cards,
wow,
and
wow.
it's right here next to me. And the front of it. And she's a very very nice person. Her and her husband came over for dinner the other night. I said, if you have a garden and a library, you have everything you need. And it's you know what? That's very true. That's very true. I love to garden and I have a nice library. So
Feed your
I
body, feed your mind,
that's
right?
so I'm ready. I have my books and I'm set. Books
There
and
you go,
bourbon.
brother. There you go. Well, yeah, she should have added that one. There are three things, right?
Yeah,
Yeah,
really, really, really
garden, books, bourbon.
nice.
There you go. All right. Well, we got a lot to cover. Always
There's
a
a
lot to cover
list.
in crypto, Jimmy. Look,
You
the
know what we should do? We
collapse.
should give people an update on the conference because I mean
Do it.
we're if so
It's
I've had like
we're
so many students ask me and it's like, guys, we've been sold out of student passes
student.
for
Yeah,
weeks and weeks now.
students
But
procrastinate.
yeah, I mean
Is
it's
what they do.
amazing how early things, the tickets started going this year. And, our conference coordinator is very, very good. She's not very good. She's the best. Nikki Bass,
Mm-hmm.
man, shout out to Nikki Bass.
Oh
She
yeah,
is keeping us
huge shout
honest
out.
as far as the limits on people and how many people can fit in the place and that kind of thing. But man, it is shaping up to be a really, really rollicking time in Durham, North Carolina in a couple of weeks.
Amen, brother. It's going to be our best attended conference yet. There are still, so all the student slots, unfortunately, are now filled,
Yeah.
but there are still a select few general admission or government slots available if
Yeah.
you want to attend. So you got to get on it fast because we are fast approaching our fire marshal limit here
We are. I mean, hotel
on,
rooms are gone
yeah,
for the
yep.
JB Duke. So they are. You have to go, or not to the JB Duke, the Washington Duke. You can go to the JB or one of the other close hotels around. But yeah, it's really it's been something else.
Yeah, folks. So don't procrastinate any further. All right.
All
Because
right, let's
slots
dive in
are
here. We
going
got a lot
fast.
of stuff this week.
All right, brother. Let's cover. And look, all these stories we're probably going to cover at the conference with, experts, folks who are directly involved
Hmm.
in these things. And of course, Jimmy, the collapse of the market structure bill in the Senate Banking Committee continues to dominate the
Yeah, how
conversation.
disappointing. How disappointing.
Yeah, a lot of, and we kind of offered our sort of initial thoughts last week,
Yeah,
last Friday, and it was supposed to be last Thursday was the markup. And so we've had a week to kind of digest. And look, anytime something like this happens, right, there's a lot of recriminations, finger pointing happening.
sure.
Folks go to Davos, right? So the World Economic Forum, of course, was sort of dominating the business and politics headlines this week. Brian Armstrong was there and was doing, a PR, CEO of Coinbase, of course, and doing a lot of media appearances there, and
Yep.
essentially blaming it on the banks. And look, the way that the media and look, there's always a story that's being told in the media, right? But then there's what's the story behind the story, and you and I kind of speculated that maybe tokenization was probably the bigger
Right.
driver here. It's clear that it's tokenization and the payment of rewards, right,
Yeah.
on stable coins, and
The
that
payment of
is the.
rewards, I'm hearing that from, man.
It's
I
coming up a
deal.
lot. It's driving the
Oh, it's coming up
conversation.
constantly.
Brian Armstrong is talking about it nonstop. Saying that the banks just are are out to screw you and don't want to compete, and they could pay more higher interest on their checking account and savings accounts if they wanted to. So that seems to be the focal point of the conversation. And there's been some reporting, including from Eleanor Terry, I think broke the story. And by the way, folks, she's going to be there. I don't think we've announced this yet publicly, Jimmy,
Yeah.
but the second most popular crypto podcast in the country, right, obviously after ours, is
Right.
Crypto in America. And they are going to be at the conference doing a live recording of an episode featuring Bo Hines, the CEO of Tether's U.S. entity, obviously former chief advisor to President Trump for digital assets. And she also runs the Crypto in America newsletter, and so what she has said is basically the White House is pissed about this. The White House is pissed that Coinbase decided to tank this at the last minute, and has
Yep.
essentially said to Coinbase and the banking lobby, all right, get in a room and figure this shit out, because we've had it. We've had it. We got a lot on our plate, right? The president has made a big push to address affordability, including
Right.
housing, and now it seems as though housing is sort of going to be the
Housing
folk.
seems to have taken
Yeah,
over
in the Senate
the
Banking Committee at
conversation.
least.
Yeah.
So that seems to be the White House's line, which is, look, we've done all we can for you guys. We want this to happen, but you need to figure out a compromise, the banking lobby and crypto exchanges, mainly Coinbase here. And I'm just not hearing any any indications that either side is willing to compromise, though. Like, all the
No.
rhetoric is like, I mean, it feels like folks have sort of dug in their heels on this. And I don't know where we go, Jimmy, if we go
I don't
anywhere.
know. I don't know where we go either. As you said, it seems like this has been taken off the front burner a little bit, and housing is has been pushed to the front. Midterm elections are coming up, and I get that. And housing is a big big expenditure for everybody. But but you're not going to fix it in a month. You're not going to fix it in 2 months. You're not going to fix it in 2 years. I hate to break this to folks, but it ain't going to happen, right?
Well,
And yeah,
how long does it take to build a new house? Like a
I
year,
mean, it takes
maybe not a year, but yeah.
these days. If it's a big box builder, they can build it in less than 12. If it's not a big box builder, you're talking 14, 16, 18 months, depending on where it
Yeah.
is, and licensing and permits and all of that kind of stuff. Besides the fact the cost has gone up for building. I
Yeah.
mean, there aren't as many people in the trades anymore. They can kind of charge what they want.
Yeah, well, we're getting
And
off track
hey,
a little bit here, but like the bottom
supply
line
and
is, I think you and
demand.
I,
I get that.
yeah. So you and I both agree that the issue is the supply. There's not
Yeah.
enough supply, and all of the policy proposals I've seen come out of the White House are about essentially our demand, right? It's like
Yeah.
essentially making it cheaper to finance, right?
To finance, yeah,
To
cheaper
finance,
cheaper
and
financing. But is that and even that takes time, right? Even that takes time to trickle down. So
yeah,
we'll see what happens here. But yeah, I mean, it's unfortunate this is being pushed a little bit to the back burner. We're looking at a couple of articles, a lot of finger pointing, as you mentioned, coming out. The fact that there's not any Democrat support. Well, there is some, but without Democrat support, and that Armstrong has kind of weighed in a heavy way, and we're seeing this and that. The next thing, it just seems like folks do not want to have any sort of they don't want to meet at all. Everybody wants it their own way, and it's like, hey, that's just not the way it happens. Nothing's going to move forward in that kind of an environment. And so I don't know. I mean, the dates right now. I mean, it looks like it's being pushed out until spring. We're not going to really see this return,
yeah,
and
in the banking
that's
committee,
that's
yeah.
really unfortunate because I mean, spring. What's going to happen at the end of spring? Well, they're going to go on break and they're going to be campaigning, and nobody's going to be paying attention to it.
No, not at all.
Mm.
Yeah, I don't. So many thoughts. I stand by everything I said last week. I mean, the reality is that stablecoin reward payment issue is really only applicable to like Coinbase, right? It's like you and I have talked about it many times. You wrote a paper about it, right?
Yep.
They get essentially half of Circle's reserve income, which
Yeah.
in 2024 was roughly $1 billion. Rates are down, but I think the float is up. So I don't know what it'll be for 2025, but roughly the same amount. So you're looking at basically they're fighting to preserve $1 billion revenue stream, give or take, right? And because look,
Something I should
obviously,
have.
yeah,
Well,
go ahead.
I should have sent you this, and I didn't. But I mean, banks, small banks, community banks, credit unions are very conscious of what's going on. They're very conscious of
Oh, for sure.
this idea, and I don't. I may have mentioned it to
Well,
you,
the
but
American
there was
Bankers Association sent a email, the president, to all banks, all member banks throughout the country, highlighting this issue and
yeah.
telling them to contact their senator, their
They need
congressman.
to reach out. There was a small, not small, but a
Yeah,
credit union in Minnesota that a few weeks ago launched their own stablecoin, St.
yeah.
Cloud Federal Credit Union, and that's how entrenched banks are looking at this. This is how serious they are about it. And one of the reasons, and this was all public, is it's in an article that was published. But one of the reasons was the outflow they were seeing, and you can see this when people ACH money out to crypto exchanges.
Yeah.
Um, and they were trying to stem the flow by launching their own stablecoin. Whether it'll work or not, I don't know, but that'll be a wait and see type thing. But I think that they are seeing the impact. A year, 2 years ago, I think people were like, wait and see. Let's see if there's
Yeah.
any impact. Now, when you see millions of dollars leaving your platform every month and being ACH to crypto exchanges, they're seeing there really can be a meaningful movement of
That's
deposits.
interesting. Yeah,
Yeah,
I that's interesting that you
I'll
have
send you that article.
that
It's a good
yeah,
article.
please. And I can put it to the show notes for folks to take a look because I haven't seen that reflected in aggregate statistics. And you and I have acknowledged, right? Like both sides are talking their book, right? And
Right.
so there's a lot of spin and self-serving arguments being made. This is the benefit of being in academia where we can call bullshit on both sides,
Yeah, we
basically,
can.
right? And so I think some of the claims that the banks are making about, because they keep citing back to that Treasury Borrowing Advisory Committee report
Right.
that was like 6 trillion or something like that. I mean, that's not happening. Look, in theory, Jimmy, the reward rate, and I hate using the term reward because it's obviously interest. It's just so I don't want to use the rhetoric the crypto industry uses. But whatever payment you get from a crypto exchange, in theory, should be capped at the rate that the yield on the government money market fund, because that's the reserves backing, right, these stable
It's
coins.
actually a little
So,
bit less than
well, it's going to
most
be
government.
less because there's going
Yeah,
to there's like transaction costs and whatnot. So like,
transaction
but
money
like,
market fees or
yeah, exactly.
management fees and things like that. Yeah,
Yeah, exactly. So, but like it wouldn't be high. So okay, so if that's like the concern from banks, like, well, geez, folks are going to be attracted to these yields. It's like, yeah, but it's the same yield that they can already get quite easily on a government money market fund, right?
hmm
So, and like no one's complaining about government money market funds draining all these deposits. You can go, Schwab, Robinhood. I mean, it's very easy to buy a government money market fund. And now, Jimmy, by the way, we have tokenized versions.
we do have tokenized versions.
Most of them are for institutional investors like Biddle, but there are
Yeah,
some that are retail available too, right? Which like have the exact same properties of stable coins. Now I think there's more of like a whitelisted aspect, more kind of
right.
KYC, I think, going on there. But nonetheless, it's like it's on chain and it pays the yield on the government. So these things are not draining deposits. I think so. Why is this become such a flashpoint? Is I think it goes back to the cross sell issue that I raised, right? I think ultimately,
Mhm.
and we've seen this in the past where crypto platforms, right? I mean, 2022 was littered with the ruins of these rewards programs,
Yeah.
right? I mean, you go through the list: BlockFi, Gemini Genesis,
Yep.
Celsius, Voyager, right? The name of the game was to subsidize, right, yield basically,
hmm
or take extreme risk, okay,
Or take
to get
the
to
risks.
to
Yeah.
take extreme risk to get folks in the door, right, to grow your customer footprint. And then ultimately, you hope that they use the platform for more trading, whatever it may be, cross sell them other things. And so I think the banks are sort of rightly looking ahead and saying, well, look, there's actually nothing stopping Coinbase or other crypto exchanges from paying whatever rates that they want to pay. I mean, if they want to
Right.
pay under the current law, they want to pay 10%, they can pay
They can do
10%,
it.
right?
Sure. Sure.
Um, and then, once you get the customers in the door and you want to be the everything app, like they want to be, Then you sell them all this other stuff. And we've already seen a little bit of this happening, Jimmy, because this didn't get a lot of attention. But in December, right, Coinbase stopped paying USDC rewards to all customers. It used to be that if you were a Coinbase customer, no matter what type of customer you were, what tier you were in, if you held USDC on Coinbase, you would get the reward. They then said, no, you know what? You actually have to be a Coinbase One customer
Yes.
now to get that reward. You have to be a member of our subscription service. You have to pay the fee, right? So this is what they do. They get you in and then they turn the knob. Right.
That's the way of everything.
Hey,
Everything has teasers, right?
Has
Teaser
anyone heard
rates on all kinds of things?
Teaser rates, exactly. And has anyone remember 8 is great? Your former employer, Jimmy?
Oh,
8 is great.
bring that
right?
up quite often. I use that as an example. Bad banking 101.
8 is great. Let's look. Okay, can we count? Can we get to 8 with Coinbase? Right. Let's see. Crypto trading. Prediction markets, derivatives,
some derivatives,
tokenized stocks. They want to do tokenized stocks. Payments, obviously. We're at 5.
We're at 5. They do fractional stocks?
Maybe. I don't know. I mean, I'm sure if we went on the website, we could probably get to 8, right? So I think that's the concern, is that the stablecoin reward is the teaser to get customers in the door so you can cross-sell them on all your other products, and it'll sort of be a loss leader, I guess.
Well, the other thing about stable coins that are really easy, especially for people that are, fairly adept and are using these platforms, is it's fast. It's fast. You can get in and out of these things. It's not like a money market fund. Freaking money market funds, you have a couple of days delay. If you go in to sell it, you can't get the money that day, folks. You have to wait because it is a mutual fund. And so everything takes a couple of days. And I think that fluidity that you get in stable coins is a kind of a big deal for a lot of people. I
think it's an improvement. I think it's an improvement.
It's an improvement, but I mean, I think people just are like, that's how I want to do things. I don't want to wait. I don't want to. And the other thing is, opening a brokerage account and things like that. If I already have an account at, any, it could be Coinbase, but it could be any exchange that where I can access these things. I don't have to have a brokerage account. I don't have to mess with, filling out a bunch of forms. I don't have to mess with anything.
But it's very easy. I mean, there's like creating an account on Robinhood is no different than creating an account on Coinbase.
Trading account on Robinhood's pretty easy. The other wirehouses are still pretty kludgy to get in and do stuff.
Yeah, that's fair. I mean, I get it. There's maybe some less friction in holding stable coins with the crypto exchange and buying a money market fund for sure. But, again, if the concern is like, well, look, banks aren't offering attractive interest rates to customers, and if there's another thing out there that's going to lead to like massive deposit. I was like, well, the thing already exists, right?
Yeah, that already exists, and it has drained a lot of. I mean, there's $7 trillion, for God's sakes, just in the U.S. in money market funds. So. I mean, I think there's 350 billion in stablecoins, which is just a drop in the bucket, but it's still growing. And when you see millions of dollars leaving your platform every month, and you're a community bank in the middle of Iowa, you kind of get worried.
Yeah, no doubt. So let's move on, Jimmy.
You just mentioned prediction markets. There's been some action in the prediction markets.
That's the nature. That's the nature of a prediction market. There's always action in the prediction market. There's, that's the name of the game.
You and I have talked about this before. I mean,
it's Biff's world. Biff's world from Back to the Future 2. We're dating ourselves. The Back to the Future franchise, though, all 3 films still hold up fantastically.
They're great.
They're amazing movies. They're amazing movies, and they're going to be amazing movies 50 years from now. They just are. I mean, look, man, a lot to say about that. So, look, there's obviously litigation going on. It's the hot thing.
The CFTC's trying to lock them in.
The CFTC's trying to lock them in, and specifically, around the sports stuff, because that's let's face it, like that's where most of the action is. Sports betting is huge. It's speaking of Biff's world, right? I mean, you can't freaking turn on the TV, especially if you're actually watching like a football game or a basketball game. I mean, if you're watching
Live Golf, I mean, every other commercial is a commercial for betting on the game, on everything, everything to do with the tournament.
I think Congress has got to get involved here. Treat it like the tobacco companies. It's
I
like,
mean,
yeah, you shouldn't be
I'm just,
just,
yeah.
not necessarily because I want a nanny state. I'm just damn tired of these commercials.
Yeah, well, I'm tired of the commercials, but I think that there should be a limit on these kinds of things. I mean, the other thing is the people pushing for this, the people doing this. I mean, I don't know. I feel like it's very seedy. That whole era. It's kind of like going to a riverboat casino in St. Louis, Missouri. They're pretty
Yeah,
seedy. Sorry,
yeah,
folks,
yeah.
they are.
In the
Uh,
1920s or
and
something. Yeah.
and I think Mike
Uh,
Seelig for pushing these things. I mean, it speaks volumes, right? The guys. So I'm going to go off on a tangent here, which I
Dude,
know
you
I
got
don't do very often, but
the runway
you
is
know,
yours, my friend.
another case of a guy who's never worked in the industry, right? All he's done, he's a lawyer who's represented people in the industry, and he's a commissioner at the CFTC. I could say the same thing about most of the folks of the SEC. When is somebody going to stand up and say, hey, maybe somebody that's actually done this for a living should be in those chairs? And, I would love to blame a certain president, but you can't, right? Because they've all done this. If you look back for the last 20 years, you haven't had hardly anybody in a commissioner's role that has actually worked in the industry. They're all lawyers that worked on the Hill, maybe, or represented people in the industry. But for God's sakes, let's have somebody who actually does this for a living, who makes their living this way. It's beyond me how these people get appointed to these roles. It really is.
There you go. That's your
Okay,
CV
that's it.
submission. Your public CV. Jimmy is putting his hat in the ring here, folks. Well, who did work in industry, Jimmy?
Who's that?
Joe Kennedy, the very first SEC chairman.
Joe Kennedy did,
Right.
for better or worse.
This is this is why Roosevelt wanted him, because he knew where the bodies were buried. Right.
Yeah.
If you need to, if the goal is to clean up an industry, you got to have someone who knows how it operates. Right.
Yeah.
And that's why he picked Joe Kennedy, who did a great job. Wasn't there that long? Yeah, I'm not going to add on that. So anyway, like back to the topic at hand.
Back to the
So okay. So
huge.
Mike Seelig has been pretty quiet. So he's the CFTC chairman now. Okay,
Right.
he was confirmed by the Senate a few weeks ago.
Yep.
And he's been relatively silent, which is understandable. He's learning kind of how the agency like he's just getting his feet under him a little bit here. But he gave he's given some remarks this week. He had a Washington Post op-ed. He's starting to kind of lay out his agenda and his priorities, which are largely as you would expect. So he sort of said, look, we're going to try to do some rulemaking here around crypto. I mean, all this stuff is like very light on details. So,
Yeah.
but he's very clear that he wants to do like notice and comment rulemaking. Which is the way to do it, frankly, because it's more durable, right? I mean, we see under his predecessor, acting chair Pham, who was just a complete disaster. I mean, speaking of yahoos, oh my god. Anyway, she would just sort of make these like announcements that didn't really have the force of law. That like there was just a lot of uncertainty around, right? There was no like rulemaking about it. She said, "This is the way we're going to do it," and it's like, okay, can you do that? Do you have that authority? So he wants to take a more traditional approach, which I respect. But one of his priorities, of course, is prediction markets, Jimmy. And look, we should do a whole episode on this. And I've kind of talked to a few folks. I'm like, is prediction markets kind of like if you go to like a crypto conference. So we're not doing anything on prediction markets at Digital Assets.
We're doing nothing on prediction markets.
And it does feel like they're kind of like blending, because now you have all these crypto platforms that like are wanting to do prediction market stuff a little bit, and Polymarket obviously runs on blockchain. So
yeah.
It seems like they're kind of sort of converging under the broader digital asset umbrella a little bit, but we're not touching it. Anyway, the issue is, are these contracts, do they fall within the CFTC's remit? Do they fall within the Commodity Exchange Act? Right? Is the issue, and specifically on, and so Chair Benham, Rostin Benham, who I was critical of on a number of issues, but I totally supported him on the election stuff, right? Because, beyond sports, that's sort of the second most popular contract, like who will win the election, right? Who will win the presidential election. And, he did not want those contracts listed on CFTC registered platforms. Ultimately, he was sued. Kalshi, the CFTC was sued by Kalshi, and Kalshi won, right? Um, and because the Commodity Exchange Act says basically like you can't list gaming contracts on CFTC on DCMs, designated contract markets. And the judge was in that case was basically like, well, this is politics is not gaming. Sports is clearly gaming. Like
Yeah.
it's literally a game. So I don't know how they've allowed this to happen. I mean, they just done nothing. Like the CFTC's just sat on their hands, and now you have this huge fight between the states and the Native American tribes because states, historically regulate sports gambling,
Yep.
right? And now, you have these prediction markets offering sports contracts, and they're saying, well, look, because of federal preemption, the supremacy of federal law, like we don't have to comply with all these 50 different state laws. We're regulated by the CFTC, but the CFTC is not technically regulating them. They're just letting
No.
them operate. So he's, I don't know how he's going to address that. I mean, all he said is like, I want to rulemaking about it. Right.
Right.
But I mean, this is the hornet's nest, man. Frankly.
Well, they're huge. They're growing fast. I'm more probably in the camp that this should be regulated by states, right? It should be a state by state, just like any other. It's just gambling. There's nothing else about it. Even when you see like FanDuel and things
but
like that. But
here's the thing, Jimmy, right? It's just
in each state.
But look, isn't it gambling if people are just speculating on the price of oil futures, right? I mean, where do you draw the
line?
And I brought this up to my students, right? Because look, I'm generally agreeing with you because obviously commodity derivatives contracts, right, have their origins in hedging purposes, right? The reality is that the market is principally made up of speculators, right? But you can't hedge if you don't have speculators. You need someone else to take the other side
liquidity.
of the you need the liquidity. So the example I gave is like, okay, well, let's say you're a sports bar owner in Buffalo, New York, and if the Bills don't make the playoffs, your business suffers, right?
Mm-hmm.
So you might have a hedging, you might want to use these contracts, right, to place a bet that the Bills don't make the play. So, but you're always so this is what so like, I think no matter the contract, you could probably do some, mental gymnastics, contort yourself into identifying like there is like some genuine hedging need out there, right? But I think those cases are small, man. I think those. I don't think people are using them for hedging at all.
No, they're using them for betting. And I mean, when you're an investor in commodities or in options, if you're doing institutional size options, you have to list what you are. Are you a hedger? Are you a speculator? You know that when you go into the trade, you know what the other side is. You know if it's somebody who's hedging something,
interesting,
or if it's a speculator. You actually have to, you're categorized as one or the other. It's not just a free for all. And so you do kind of know who the other side of it is.
That's interesting.
And these are not like that at all. These are should the CFTC have purview over something like this? Under what law? Why then are you going to start doing it on poker in Maryland? I don't know. Why not?
Well, and that's the thing. And like, look, this agency is tiny, and it's been decimated by Doge and by all the nonsense fan pulled when she was there. And it's like, and by the way, like,
and there are no other commissioners.
there's one there's one person running it. Yeah. Congress is contemplating giving them all this new authority without giving them additional resources. I think some of these bills contemplate allowing them to sort of recoup costs from the crypto industry, but they would have to choose to do that. And we know the crypto industry would, raise a ruckus if they were, forced to pay anything. And then you pile on prediction markets. There's like 500 people that work at this place. Okay.
Yeah.
And so now they have to regulate their historical markets of commodity derivatives, which are massive markets, folks. I mean, CME is a massive market. Now crypto, another massive market. How do you even regulate prediction markets?
How do you even regulate a prediction market? How do you even?
I don't know, man. Look, and this thing is because with an insider trading, right?
Insider trading, yeah.
Commodities law,
people throwing things.
There's no analog. There's no. So under commodities, there's really not an insider trading prohibition because the whole nature of hedging is that the people doing it have information.
They're insiders,
right? Yeah, they're the insiders. Like ExxonMobil is hedging, because they know like what their prospects are for finding and recovering oil, right?
Right.
Like, so we've seen these stories, and it's going to keep happening every week, right? The Maduro, someone placed a bet on Polymarket that Maduro would be ousted, right?
Yeah.
A day before it happened or 2 days before it happened, and netted like 400 grand. I mean, it's literally a story like this every week. It's the
Yeah.
complete Wild West. Now we have the prop trading firms, making market, jump trading, right? Susquehanna,
Yeah.
they're in there. So by the way, folks, like, look, you're the minnow in this pool if you're playing in these markets too. So anyway, I'm with you, brother. I'm with you. Unfortunately, people aren't listening to us on this particular issue. All right, well, let's talk. So speaking of the CFTC, Jimmy, there is, a parallel effort in the Senate, right? There's, the Senate Ag Committee. So we've talked about market structure a lot, but that's under the Banking Committee. There's a parallel piece that is proceeding to a markup next week on the 27th, I believe.
Yeah.
And that's really going to cover the CFTC's piece of crypto oversight, and then how they regulate the exchanges, the digital commodity exchanges, and the brokers and whatnot. No Democrats are supporting that, even though there was some bipartisan negotiations going on. So we'll see what happens with that markup. So there is some movement. I guess if you're someone who wants crypto market structure to happen, there's a little bit of hope. At least the Senate Ag Committee is at least for now planning to move forward. So we'll keep our eyes on that. Look, Jimmy, I want to talk about something a little more relevant here. Well,
Okay.
it's all relevant.
Okay. But hey, all this stuff is relevantly.
It's all relevant, but
relevant,
but like product launches, right? Like shit happening, basically. Let's talk about some shit that's happening. Okay.
Yes.
Two things one has happened. Okay. And one is going to happen. The thing that has happened is we've had a crypto related IPO, a little under the radar IPO. Okay.
A little bit. Yeah. It was a little bit under the radar.
BitGo. Tell us about BitGo, Jimmy.
Well, I mean, say a company that actually did do an IPO. We've been talking about companies that aren't. And the stock popped first day, got a good pop, 25% out of the gate.
But it came back. I think it only opened. It closed, a little bit higher.
Yeah,
so they priced it at 18. Yeah, but it did have a pop a little bit. Yeah,
it did have a nice pop. I mean, people are. I think this, and if I'm going to go off on this a little bit, I think there are two reasons that it had the pop. One, people were interested in the company. And what they do and that kind of thing, and anything in crypto or blockchain now is super popular. But beyond that is there's been a real dearth of IPOs. And so if you're interested in that market, interested in getting into new things, you're going to have an order in there to buy that on on the deal. And so there was a pretty good bit of demand for the for the deal at the in the secondary market after it actually went public.
So for folks who don't know, BitGo is actually a really important company in the crypto economy that doesn't get a lot of attention. So they have a couple of business lines, but their main one is custody, right? So, they were kind of pioneers of multi-sig wallets. They are providing custodial services for a lot of the other kind of big crypto products and companies that you have heard of, right? So, so the ETFs, they're doing custody for that. They're custodying stablecoin reserves for a number of stablecoin issuers. So they are really kind of essential market infrastructure here. And I think, this is a stock to keep an eye on. Jimmy, we're so freaking busy right now that I'd love to do an S1 deep dive on this company. So maybe after the conference, we can come back to it. Yeah. Because my gut tells me and they're profitable, right? Unlike a lot of other crypto companies, like they are profitable. My gut tells me that they're like, this is like a company that actually has some staying power and is worth maybe taking a look at from an investor standpoint here. But again, that crypto custody is just not sexy to most people, certainly to not retail, to retail investors.
It's a big deal.
You need it, right? You need it, but it's not when compared to some of the other sort of crypto IPOs that we've seen, Circle, right? That's like a brand name company in crypto, right? Everyone knows Circle and whatnot.
Yeah.
People don't know BitGo, but they're doing an important job. The other announcement, Jimmy, is I think a bigger announcement. The tokenization train keeps rolling along, brother. New York Stock Exchange.
Train, but I've heard mixed. I know where you're going with this. The New York Stock Exchange announcement, but man, I've heard mixed. A lot of mixed things about this. I'm hearing it's vaporware. There's nothing there.
Well, it's just an announcement. I mean, so we don't.
And that's pretty much all. That's the substance is an announcement.
It is an announcement. It is
Yeah.
an announcement. So for folks who didn't see the news, the New York Stock Exchange, okay, announced plans to launch a 24/7 trading platform for tokenized securities. Okay. That's really all we have to go on right
Yeah.
now. It's going to be open like I said, 24/7. It's going to allow instant settlement. I mean, this is what they're saying, right? This is what they're saying. Customers can fund their accounts with stable coins. We don't know which stable coin. We don't know which blockchain it'll be on, right? They
Yeah.
did say that they're not doing this with Polymarket because they have ICE, the parent company, Intercontinental Exchange, has a deal with Polymarket. So they're not doing this with Polymarket. Reading between the lines, Jimmy, I mean, this sounds like the goal is, and we're going to talk about this with Prometheum at the conference, digitally native, right? So this is an issuer. This is not a mirror token situation. This is not
No.
where, DT, like what the DTC is doing, where they're locking up the actual.
This is the offering.
This is the issuer is out of the gate, putting it on the blockchain.
Yep.
Right.
Yeah. And that is a big difference. I think a lot of people don't realize the difference. There are a lot of things that are tokenized that aren't really the asset. They're a representation of the actual asset that is held someplace else, held in a vault someplace. There are a lot of companies that are tokenizing things, but the difference between having a token that's actually the asset and one that represents the asset, two very different things. And if you want to see where this, really, and people might say, well, is there really a difference? Yeah, there is really a difference.
A little bit, yeah.
There's a big difference. And one of the big differences is actually in something we were talking about earlier in banking. Banking draws a very, very hard line between an asset and a representation of an asset. So a bank, for instance, can hold treasury securities as capital. But if they hold money market funds, which represent treasury securities, doesn't count as capital. Right. And so that line has been out there for a long time. If something were to seize up, if something were to happen, you don't have that asset. And I'm not saying anything goes wrong with the company, but I mean, things happen. Shocks happen in the economy, shocks happen in the world. And all of a sudden, if you can't liquidate something, if you don't have access to that actual asset, you only have a representation, there's a big difference, folks. And so this idea of putting things on, but as I said, there was an article, I think it was in Fortune, that basically said this is just an innovation, press release. It's not. There's nothing behind it.
So they haven't done like the work. Like they don't actually have like a plan to go ahead. Yeah. Is that the premise? Because I didn't see that article.
Oh, I'll send it to you. It's I think it was in Forbes. There was a professor. I can't remember where he was from.
I think I saw the headline. He's like Columbia or something like that.
Maybe. I can't remember.
Yeah, I think I saw the headline now that you mentioned it, but I didn't read it.
That basically. Yeah,
I just don't. It's like that. Well, it's the big board, man. It's the big board, like the New York Stock Exchange.
It's funny how small the big board is these days, right?
Well, I hear you, but I'm just saying, like, given the pedigree there.
Oh yeah,
you wouldn't expect them to just make an announcement with no real intention behind it. I mean, I know we're living in Biff's world now, so maybe this thing is going to be.
We are kind of living in Biff's world, and it's when we think about what we were talking about at the very beginning. People are they want to show that they're doing something. They want to show that they're exposed to this asset, but are they really?
Well, I have an announcement then to make. We are tokenizing coffee and crypto. Okay, folks. Noodle on that.
We could do that.
Noodle on that. All right. We're going to tokenize coffee and crypto.
We could do that. We could do
that.
Right.
There we go. All right, brother. We left some stuff on the cutting room floor here. That's okay. Look, stay safe this weekend. Stay inside.
Stay inside. Have fun with the boys.
We'll do this on Friday. We'll do this a week. It'll be our last. So next Friday will be our sort of last podcast before the big conference. digitalassets@duke.org. Make sure you sign up. We're being serious. Spots are filling up fast. We're going to have to turn off registration soon, which is we're really excited about.
I hate doing that. I have emails from people this morning. Hey, as students, can I get in? And it's like, I'm sorry, you can't. Yeah. I hate doing that.
But you got to. All right, man.
Have a good weekend.
All right.